Alright, fellow ape holders, XMAX Trading here. Go ahead and hit that subscribe button if you haven't subscribed to the channel just yet. Hit the like button in the video, helps out the channel and the YouTube algorithm, reporting the content on the stock market and the AMC movement. So, have an interesting article by Marketwatch saying that the meme stock market trend around AMC and GameStop may be more persistent than you think, says report. Kind of by Captain Obvious there. Let's go and see what's about. Yeah, GameStop, Wall Street Bets. Alright, you think meme stock investing is a fad? Think again. That is at least according to a new report from financial advisory firm Betterment. About 97% of those recent survey conducted by the digital investment advisor, who said that they had invested in stocks driven primarily by social media mentions rather than fundamentals, will continue to do so in the foreseeable future. Such meme investing trends have been the main drivers behind purchase of companies like brick and mortar video game retailer GameStop, movie chain AMC, BlackBerry, ubiquitous cell phones, in the 1990s, early 2000s. Stocks and crypto like Dogecoin that aren't necessarily offering compelling use cases or earnings are rising on the dint of a collective might of retail investors gathering on sites like Reddit and Discord. It's a trend that's been long viewed as doomed to implode at some point, but individual investors surveyed by Betterment between late April and early May who had invested in meme stocks before say they will continue to be investors in that category of investing, which makes sense in my view. I mean, you have highly shorted stocks and people can invest in them and perhaps destroy the short positions and make a lot of money. According to the Betterment survey, this is a near universal consensus that they will continue investing in stocks like these. They get a lot of attention in the future. And 97% said they're at least somewhat likely to invest. This is even as the outlook of GameStop and AMC and its ilk look uncertain. And its ilk, what a derogatory. Look uncertain. Yeah, I disagree with that. This is not financial advice, but I think that, the shorts have to cover at some point, so its ilk does not look uncertain in my view. Betterment survey included a panel of 1,500 respondents from April 26th to May 3rd who were 18 years and older and have any kind of investment, excluded if they only have 401k. Of the total, half of them actively day trade their investments. Well, they're trying to make a better return in my view. Kind of makes sense. After that said, most of the respondents in the survey indicated they had some understanding of meme investments, while nearly a quarter, 24%, said they didn't understand it as well at all. Investments like GameStop have captured the imagination of young investors because of the stratospheric gains it has seen. For example, shares of GameStop are up about 1,000% of the year, and those for AMC, 2,500% or 2,500% since the beginning of the year, with Dogecoin's up nearly 5,000% year to date. By comparison, more traditional assets have been muted, although strong gains. The Dow Jones Industrial, SP Index up nearly 12%, 30% respectively. NASDAQ up about 12% after a stellar rally in June. A number of investment funds have cropped up in the hope of capturing the Reddit buzz. Oh, that's interesting. Including the VanEck Vector Social Sentiment ETF, Buzz. Was it app ticker Buzz? Funny. The exchange traded fund is up 12.2% in the last 3 months and has gained 6.5% in June, outperforming the Nasdaq's composite June gain of 4.5%. As with many anecdotal studies, Betterment report concluded that government stimulus checks and stay-at-home protocols in place during the worst of the COVID pandemic helped to foster a move by retail investors into trading and investing. How long have you been day trading? So the majority of them are 3 to 5 years. That's before the pandemic. 1 to 2 years right during the pandemic. Less than a year, during the pandemic. But still, majority of people have been 3 to 5, longer than 2 years, so it's decently popular. While most day traders indicate their main reason for doing so is they believe they could make more money in a shorter period of time, many also indicate it was because it was fun and entertaining. About 54% of the respondents said the pandemic made them trade more often. The idea that retail investing will continue to be a phenomenon may not be far-fetched at all, even if the meme stock fad subsides somewhat. Yeah, according to Marketwatch. According to estimates from GMP Securities, new brokerage accounts opened by individual investors have already roughly matched the total created in 2020, hitting more than 10 million in the first half of 2021. I mean, it makes sense. People want to make money. Why not? Yeah, GME and AMC and BB to the moon, baby. Not financial advice, just reading other people's comments. Finally, so I stayed out of the meme stocks for months. Finally, on the second rocket ship of GME, I started trading options by selling puts on it. Made a ton, lost nothing. Then I added AMC and sold more puts and rode that for a month or so. The strongest gains of my entire portfolio. It's really not as risky as the options premiums made out to be. Market sentiment seems to be that matters anymore. Market sentiment seems to be all that matters anymore. So you might as well change your strategy and profit from it. Makes sense to change your strategy if it works for you. Not financial advice, Oh brother, looking for the end game. AMC to the moon, and I hold it strong and buy the dip. Dips work really well with chips. You dip your chip, and it tastes good. All right, guys. Until next time, peace.